Dustin Tibbetts, financial advisor with Jazz Wealth Managers. We manage retirement accounts for the everyday investor. We have the same financial advisory services that they're normally reserved for the wealthy, but I hope you'll check us out at jazzwealth.com. Well, enough of the sales pitch already. Today we're going to talk about Boeing. This is a name I'm quite sure many of you have heard of. You've probably flown on their planes many of times. And like our previous overview videos, we're going to dissect this company just as great of detail as we've done in the past, so you can see if it's something that you want to invest in your portfolio. If for some reason we help you through this, maybe you'll help us and hit the subscribe button. We greatly appreciate it. Okay, if you've never heard of Boeing before, they make airplanes, right? In terms of revenue, aircraft, overall deliveries, they're the largest aircraft manufacturer on the planet. Now, they're also the largest component of the Dow 30 index. They're currently weighted at 10% of the entire index, so when they do something, you want to pay attention. Now, there's been huge global demand for commercial jets. It seems like nearly every day you see another announcement of a new orders that come from airlines and maybe freight companies, DHL, UPS, FedEx, etc., from all over the world. The company themselves, Boeing, says that over the next 20 years, the market outlook for commercial jetliners will increase by 4.1%. Single-aisle jets are the major driving factor behind this growth. So now it all sounds great, it all sounds nice and rosy for the company, but they do have some challenges. Competition and trade are just some of the potential headwinds for the company, but hey, what industry doesn't have a little competition, right? So not that big of a deal. Oh, also, that badass 747 model, that seems to be fading away as the demand for larger commercial passenger and freighter aircrafts, as well as slower than expected growth of global freight traffic around the whole world at the moment. Nobody's talking about that. But basically, that's a fancy way of saying that the big jets are no longer really needed. They're going to the smaller ones. All right, so first, let's talk about the fundamentals. Now, the company themselves breaks their fundamentals into 4 different segments. First is the commercial airliner segment, which we've all heard of. It makes up 59% of the company's overall revenues. Now, without trying to make myself look like super duper smart here, let's just say that this segment makes planes, it makes parts, and it services those planes and parts. All right, next is their defense and space security segment, which is probably the coolest of all of them if you happen to look this up online. Incredible. This is spacecraft, warcraft, satellites. It makes up 19% of all their revenues. The third segment is global services, that's what they call it, which provides more software training and logistics for companies, as well as support and maintenance. Think like UPS, FedEx, DHL. This accounts for 23% of their overall bottom line, so it's pretty important. And finally is financing. That's a division they really don't put a lot of effort to anymore. Finances the planes and all the equipment, but really it accounts for about 1% overall of their bottom line. Not a big deal. Now, the company has strong recent history of earnings. For the last 4 quarters, they've actually beat Wall Street's expectations by a whopping 28%. So they're doing much better than Wall Street has, what they really thought. Now, thanks to that, the Dow has finally come back to hitting those all-time highs because of help from Boeing. All right, let's take a look at the stock performance. The stock price sitting near all-time highs. In fact, just recently broke out again, and we could say that they've earned it. It's higher by 26% this year already. Long-term technical traders will note this new breakout that just happened on the stock as the next great move, right? So is now really the time to buy? Well, the company has grown faster than their competition by almost double, and we already mentioned that demand is on the rise. Now, the company says that the world will need an additional 42,000 planes in the next 20 years. That's worth about $6.5 trillion if you do the math on that one. The industry thinks that single-aisle jets will be one of the biggest growth areas, as we said, and that's great news for Boeing because they continue to speed up production of their 737 and their 787 Dreamliner. Now, in the second quarter, they're actually able to go up to 137 planes in the quarter versus 123 planes last year, which is probably due to the fact that they're bringing back some of the retired workers to help them out. Imagine guys in wheelchairs cranking wrenches. All right, order flow, that's the next good thing. We normally talk about cash flow, but order flow for the company has been great. They've got a ton of new orders, including 24 planes from FedEx, 24 from Bamboo Airways, 25 from Ryanair, and that's just to name a few off the top of my head. Okay. But what about the bad news, right? There's got to be some bad news. Well, there is. 787 production problems. It keeps coming up. These production costs as well as delays are costing these guys billions with a B in overruns, and they're years behind deliveries for these planes. Every time the company reports earnings, analysts are all over focusing on this problem for the company, but it is getting a little bit better. Next thing, 747s. We just talked about the slowdown for those really cool jets, but look, people don't want them as much anymore. They've actually changed production from doing one a month now to only one every 2 months, and they're faced with the real possibility that they may have to end production for the 747 altogether, which would come at a huge cost to them. All right, the next thing is competition. There are Canadian, Russian, and Chinese manufacturers that say they're only a few years away from delivering what would be their version of the 737 to try to compete for this single aisle demand that's so big, right? Well, there you have it. That's really all I have to say. I can't think of anything else I need to say. But remember, this is not an attempt to get you to buy or sell the stock, rather just an idea, a drama-free idea or a way to kind of analyze a stock, see what you think about it, see if it's something you may want to invest in. I'm Dustin Tibbetts with Jazz Wealth, and now you know.